Hi guys, Tara Ryan here with Fairway Mortgage, and today's tip from Tara is an update on interest rates. Here's where we are, folks. Rates are up. The last 3 weeks or so have been pretty volatile for interest rates, and interest rates have edged up in a noticeable way. So, in fact, they're the highest they've been since the beginning of the pandemic. So in the depths of the pandemic, we got into the twos, edged up to the high twos, edged up a little bit more to the low threes, and we've hovered there for quite a while. In the last 3 weeks or so, we're now solidly in the high threes, if not the low fours, depending on the buyer, depending on the day. Couple of things I want you to understand. The Fed has made some announcements about their intent to raise interest rates in their meetings going forward. That does not directly move mortgage rates. When the Fed makes a move, they change the rate that banks lend to each other, and that directly impacts things like credit card interest rates or adjustable rate mortgages in the adjustable period, home equity lines of credit. But it does not directly move mortgages. Mortgages are packaged up into bonds, mortgage-backed securities, and they're traded as bonds in the open market. So they are impacted by the news of what the Fed intends to do. My point is, the Fed's announcement about raising rates in the future is what has caused this change in interest rates now. That combined with high inflation, government spending, and a lot of external macroeconomic factors. But good news, there's no impending deadline. When the Fed meets mid-March and raises rates, that's not going to directly move mortgage rates. In fact, the mortgage market is already planning on that. What could move the market further is if they decide, oh, we got to raise rates even higher than we said that we were going to. So it's really in the minutes of what they say at the meeting that could move the mortgage market, not the actual interest rate move. So good news, bad news. That increase that they're talking about is already baked into mortgages, so we don't have any impending deadline coming up. There are many folks that think, hey, we're probably going to hold steady here for a little while unless the Fed surprises us with more talk about needing to raise rates even further. So what do we need to do? Well, we need to know this is normal. It is a market. Interest rates change over time. So if you've been in the industry for a long time, you know, hey, this is just how it goes. If you are newer to this, don't panic. People still buy homes as interest rates go up. But this is the challenging time when rates have just changed. It's a shock to the system. So we need to communicate really clearly to our home buyers what's going on so we don't surprise them, and then talk them through how to think about it. Okay, so super important that you reach out to all your buyers, mention that the last few weeks have been a little rough on interest rates, and make sure that they're in communication with their lender to get an updated quote so they can see the impact of the payment. The next thing that we do is we talk in terms of payment and not rate. When we talk about going from 3% to 4%, oh, it's a psychological barrier. We're going to have some resistance there. But for most folks, we're talking less than $100 a month, right? We're in a high interest rate environment. Rents are going up dramatically. Many people are getting large raises in the upcoming months. That slight, I shouldn't say slight, but $100 difference in the payment really is not that big a deal, especially in an inflationary times, right? So we need to get to the facts, get them looking at numbers, and most importantly, be communicative so that they have the information and they're not surprised after they go under contract. All right, so reach out to all your buyers, make sure they're up to date, get them in touch with their lender. If that lender is not very responsive or you feel like they need a more consultative approach, please reach out. I'm happy to chat with them and get them some updated numbers and make sure that we talk them through what that means and that it's nothing to be overly concerned about. Frankly, it's still a gift from the government to get interest rates as low as they are. Right? This is not normal. Government intervention is still there to keep rates where they are. In a normal market, rates would be even higher than they are. So let's be communicative. Let's make sure we explain to buyers what's going on so they're not surprised, and reassure ourselves it's going to be okay. As always, let me know how I can help.